Happy Monday, everyone. It's Matt Donahue with Mission Financial Planners. This is your weekly market update for the week ending, last Friday, which would have been the 20th, right? So tax week last week. What went on in the markets? We'll talk a little philosophy, some healthcare, and some tax tips this week as well. Well, April has been a rough month for the S&P 500. So the retreat from the record high that the S&P had in March accelerated. The S&P was off 3% for the week to post its third negative result in a row. NASDAQ's weekly decline was steeper at about 5.5%. However, the Dow was up a little bit in some overall mixed results for the week. Worries about technology companies and interest rate outlooks are weighing on growth stocks, and the U.S. large cap growth benchmark trailed its value counterpart by a wide margin. The growth stock index closed down nearly 5% for the week versus less than a 1% decline for the value index. Part of that is because yields went up again. Yields of U.S. government bonds rose for the third week in a row as investors continued to rein in their expectations for a near-term interest rate cut. The yield of the 10-year Treasury briefly rose all the way to almost 4.7% on Tuesday. It's the highest since last November before it came down to about 4.6% on Friday. The U.S. Federal Reserve Chair Jerome Powell conceded that it's likely to take longer than expected to gain sufficient confidence that inflation is on a sustainable downward path. On Tuesday, he talked about reinforcing his recent messaging around a delayed timeline for interest rate cuts, saying it's appropriate to allow restrictive policy further time to work. Index, and of course, anxiety went up, right? And index that tracks investors' expectations of the short-term U.S. stock market volatility rose for the third week in a row. It's at its highest level in nearly 6 months. On Friday afternoon, the CBOE Volatility Index was up 46% from a recent low on March 27th. Oil volatility, the price of U.S. crude briefly spiked around 4% to more than $85 a barrel late on Thursday. That's in the wake of the latest hostilities between Israel and Iran. However, prices quickly reversed course as tension eased a little bit, and Friday's afternoon price of around $83 marked a roughly 3% decline for the week. China's government reported that the nation's GDP grew at an annual rate of 5.3% in the first quarter. That's exceeding most economists' expectations. The result follows implementation of stimulus measures that are designed to bring the world's second largest economy closer to pre-pandemic growth rates. U.S. GDP is coming up this week, Thursday. There's going to be the release of the U.S. government's initial estimate of first quarter GDP. It's expected to show the economy retained a solid growth track, but slowed a little bit relative to last year's fourth quarter, when GDP grew at a 3.4% annual rate. Estimate released on Tuesday by the U.S. Federal Reserve, economists projected a first quarter growth rate of around 2.9%. Reports, nothing scheduled for today. Tuesday, tomorrow, new home sales from the U.S. Census Bureau. Wednesday, durable goods from the U.S. Census Bureau. Thursday, first quarter GDP advanced estimate from the U.S. Bureau of Economic Analysis. Pending home sales from National Association of Realtors, weekly unemployment claims from the U.S. Department of Labor. Friday, personal consumption expenditures, price index, and the University of Michigan Index of Consumer Sentiment. Moving on to philosophy. Okay, the mark of a rational person. Uh-oh. I know a lot of people who would say, Matt, you're kind of missing the boat on this. But there are the characteristics of the rational soul: self-awareness, self-examination, and self-determination. It reaps its own harvest. It succeeds in its own purpose. That's from the late Roman Emperor Marcus Aurelius. Well, he's right. Hey, if I'm self-aware, I'm probably not running around like a bull in a china shop. If I'm thoughtfully self-examining and not just being overly critical, because a lot of people are their own worst critics, but just self-examining. Could I have done something better? Did I need to react the way I did to something? And then self-determination, right? It goes back to that whole idea of you're really in control of how you go about doing things. Tax tips. Okay, last week was tax season. I know you're all sick and tired of hearing about taxes, but guess what? Taxes, like death, are not going to go away. So let's keep talking about them. So basis, capital gains, and losses. Okay, a couple questions for you. Did you buy property for your business last year? Did you sell stocks or mutual funds? Did you receive an inheritance? Did someone gift you a car, a house, stock, or any other asset than cash? In all of these events, your total costs, investment, or inheritance is known as basis, and it's going to affect your tax return when you go to sell some of that stuff. The IRS has great points on how to address capital gains or losses. When you sell a capital asset, the sale usually results in a capital gain or loss, and a capital asset would be most property you own and use for personal or investment purposes. So here's 10 ideas from the IRS on capital gains and losses. Okay. Capital assets, what are they? Things like your home or car. They also include investment properties such as stocks or bonds. Gain or loss, or excuse me, a capital gain or loss is the difference between your basis and the amount you get when you sell an asset. Your basis is usually what you paid. You have to include all capital gains in your income. Since 2013, you may have been subject to the net investment income tax. This applies at a 3.8% rate to certain net investment income of individuals, estates, and trusts that have income above statutory threshold amounts. You can deduct capital losses on the sale of investment property. You cannot deduct losses on the sale of personal use property like your house, car, furniture. Capital gains and losses are either long-term or short-term, depending on how long you held the property. If you hold it for more than a year, your gain or loss is long-term. 1 year or less, the gain or loss is short-term. If your long-term gains are more than your short-term losses, the difference between the two is the net long-term capital gain. If your net long-term capital gain is more than your net short-term capital loss, you have a net capital gain. Tax rates that apply to net capital gains will usually depend on your income. For most people, the rate may be 0% on some or all, or for some people, I should say, the rate may be 0 on some or all their net capital gains. The maximum net capital gain tax rate increased from 15 to 20% back in 2013. And there's some special types of capital gains that could apply a 25 or 28% tax rate. If your capital losses are more than your capital gains, you can deduct the difference as a loss on your tax return. This is known as a net capital loss. The amount is limited to $3,000 a year or $1,500 if you are married filing separately. If your total net capital loss is more than the limit you can deduct, you can carry over the excess losses you are not able to deduct to next year's tax return. You'll treat those losses as if they happen in that year. File Form 8949, Sale and Other Disposition of Capital Assets with your federal tax return to report your gains and losses. You'll also need to do a Schedule D, Capital Gains and Losses, with your returns as well. A couple key points. Basis is defined in a lot of ways, but it's either what you paid for your assets or what others paid for it if it was gifted to you. Basis is stepped up to fair market value if you inherited it. Basis is important. It's going to help determine your gain or loss. The higher your basis, the lower your capital gain. One note on mutual fund holders. If you hold mutual funds, your basis increases as capital gains and dividends are reported if they are reinvested. Brokerage houses will keep that information for you. So if you recently changed broker dealers, like you came over to work with us at Mission Financial Planners, right? Your old broker dealer will still have that information for you. And reduce your capital gains by keeping track of your basis. Keep a log of what you paid for stuff, right? That can really help out when you go to sell. Okay, last thing for the week, health tip. We're going to continue on the stress path we've been on from the Mayo Clinic. In this case, it's caregiver stress. And this is something I learned about when I really started getting into long-term care planning. From a caregiver stress standpoint, what you deal with in many cases is the person who's providing care to the sick person actually ends up getting sick or passing away in many cases before the person they're taking care of. And so you got to take care of yourself, right? You just have to. So some kind of scary information for you. As the population ages, more people do caregiving. About 1 in 3 adults is an informal or a formal family caregiver. Excuse me. A caregiver is anyone who helps another person in need. That could be an ill spouse or partner, a child, an aging relative, could be a friend, right? Caregivers have higher levels of stress than people who are not caregivers. It's important for them to know that they need help and support too, because it's rewarding, but it's stressful. For most caregivers, it feels good to help someone they love, and it can make up for a stronger relationship. But there's a lot of emotional and physical stress that goes with it. So some factors that increase caregiver stress: taking care of your spouse. Guys, especially for those of you who are 45 to 60, you've got to do some long-term care planning. You just do, right? And if you talk to us about it, what you'll find is that we don't really care what the plan is as long as it's a good plan. It isn't, oh, my kids are going to do it. Okay, wait a second. You've done a great job of savings. What's the dollar amount you're setting aside just in case? You didn't do a great job of savings, or you're someone who really believes in only paying for what you need. Well, okay, does some insurance planning make sense? Okay, so it could be you're taking care of your spouse, you're living with the person who needs care. There's someone who's you're providing constant care for. Now, here's where it gets scary though. Maybe it's all on you. Maybe it's making you feel like there's no way out and this is going to be the rest of your life. Maybe it's impacting your work and causing money problems for you. Maybe you're not getting a lot of help from healthcare professionals, or maybe you had no choice. Maybe it was just your parents didn't plan, and now you're stuck doing it. Um, so some things you want to look out for: feeling burdened or worrying about it all the time. You're always tired. You either don't sleep at all or you sleep way too much. You're gaining and losing weight. Your your temper's a little more volatile. You're not really interested in stuff you used to enjoy. Maybe you're feeling sad. You're having aches and pains that you never used to have. Maybe you're using some alcohol or drugs to kind of ease that pain, right? You're missing medical appointments. When you start adding in all that stuff up, it's going to affect your health. So the emotional and physical demands, right? The strongest person out there is going to feel that. Doesn't matter mentally, physically, they are going to feel that strain. So there's resources out there. Number one is get some help. You can do an adult daycare program for the person you're caring for. You just once or twice a week drop them off all day to give yourself a little bit of a break. Focus on what you can do. And this goes back to our philosophy quotes, right? It's a matter, folks, of just being realistic about what you're able to do and what you're not able to do. Same thing with goals. Goals you can reach. Journey of 1,000 miles begins with one step. That's a very, very just great saying because it's so true. If you can just take one little step forward, move beyond where you were, it has just a huge, huge positive impact on everything. Get connected. You'll be surprised how many resources are out there if you start looking for them. Join a support group. Get some social support. Take care of your health, and then see your own doctor. Okay. Now, one of the things I'd want you to look into if you are someone who's a primary caregiver for someone else is respite care. Respite care is just the idea that, for 2 or 3 days, that person you love is being cared for, maybe at a facility, maybe by a nurse or whomever, but someone who can come in and take over that caregiving burden for you for 2 or 3 days so you can have a break. Everybody needs a break every now and then. And, the person you're taking care of is going to be okay if you're not there the whole time. So they could come to you, the caregivers, I should say. You could take them to an adult care center. There's some short-term nursing homes, right? Things like that. The other thing too is try to work outside the home. I know it can be super stressful trying to care for that loved one, but if you can also work outside the home, just getting outside the home and doing part of like a normal routine will totally help your mental health. So, on a positive note, control what you can control. Take some of the information we have, apply it in your everyday life. Get a hold of us. Check this out on, I know we're going to post this on LinkedIn and a couple other places today, but check out our YouTube channel. Check out my LinkedIn page. Check out Mission Financial Planners LinkedIn page. Go to our website. There's a ton of resources and tools out there. Call us. Call me, Ken, Jason, Andrew, anybody on the team here. We're able to help you. So everyone, I hope you have a fantastic week, and let us know if you need any help with anything. You can call me directly at 726-727-6581. Feel free to text me there as well. Once again, 726-727-6581. Send me an email, mdonahue@mfplanners.com. Check out our website. Thanks, everyone. Have a great week.